Hello, everyone. Welcome to the first live session of the week. I did say at the end of last week, we're now going to be doing these 5 days a week, I think, because they're proved to be popular and markets are interesting at the moment. So we'll do them Monday through to Friday at 12:30 every day. If we do send out push notifications via our trading app, so if you're a client, you get those anyway. But to try and not swamp people with push notifications, we're not going to send them out every day. So I think the easiest way of just getting a reminder that we're going live is if you just click on the subscribe button on YouTube at the bottom right, you'll get, and that alarm bell thing next to the subscribe button, we get a push off YouTube. But we will send out reminders from the app, maybe 3 days a week, just so people know. Let's just put the risk warning up just before we get started. So if you've never attended these before, we look at the major markets. We look at the euro, the pound, some stock market indices, US and Europe, oil and gold, just to see what's been going on over the last few days and some of the levels where there could be opportunities in the days ahead. Today, it could be a quiet day today. The US stock market is closed this afternoon. It's the Martin Luther King holiday in the US today. So US markets are shut this afternoon, but there's still plenty of other things moving around. I think today the UK Prime Minister, Theresa May, has to present her latest deal on Brexit. So that could always be interesting, of course. Plenty to push the pound around there. So we'll take a look at these markets in a minute and get going. Right, I think that risk warning has been up for long enough. So let's just pull that across. If you have any questions, if you're on the YouTube thing, if you type a question into the chat box, I'll keep an eye on this and answer any questions as I'm going through. Actually, so what's someone's asked, Goldman Sachs have suggested investing in the pound despite the uncertainties surrounding Brexit and the vote. Is there reasonable substance behind that? Well, that is something. I'm glad that Goldman Sachs agree with my view on this. I think the last couple of weeks we've been talking about this, about the pound, how the pound has been relatively strong this year despite Brexit. And I think I've said it a few times. I'm just wondering. We know what in theory, at the moment, we know what the absolute worst case scenario is. The worst case scenario is we come out with no deal. We come out assuming Brexit goes ahead. So we know what the absolute worst case is, and it does look as if markets are discounting that. And maybe we end up with a better case from a market's point of view, leaving the politics aside for a minute. Maybe we come out with a better deal. Markets would like it if Brexit got delayed, arguably. So I think because we know the worst case, that's why the pound has been doing this month, relatively well. It's only back up to where it was in November, end of last week. We poked above 130. But I think I've been saying for a few weeks that I think the pessimism towards the pound has been maybe overdone. We saw on the vote, was it last Monday night, that the pound rallied on the vote that Theresa May lost, and I just think we're maybe some people got a bit too carried away, because don't forget we'll start off looking at the pound because we've talked about the B word, this time last year or in April last year, pound US dollar was trading at 143. We're currently we're now 128, so we're about 10% lower than where it was in April. So the last 6 months of last year were pretty tough for the pound. So it would not surprise me if we see the pound continue to gain ground up to us leaving or not leaving or whatever it is we're going to do at the end of March. But I think it's an interesting market. But I think it's quite a difficult market to trade, though, because so much of it is, just based off rumor and whispers and, what's going to happen with Brexit. It's not ignoring the economic fundamentals about the UK. But it really is a politically driven market at the moment. But let's take a look at it. I was looking at it this morning just from potentially a short-term trade point of view. So this is an hourly chart. So we've had the odd scares along the way. Even this year, we saw that big plunge January the 2nd. We saw it sell off a week ago into the Brexit vote in Parliament, and then rocket when that vote came out. And it traded as high as 130 on January the 17th last week. What was that, Thursday? So we traded as high as 130 on Thursday. And where I thought it was interesting, it sold off on Friday, and we've pushed a little bit lower today, so maybe we can be a bit patient. But going back to last week, Wednesday, Thursday of last week, 128.20 had been a big level. Yeah, and we have seen it bounce off that level today, pound US dollar. And I'm just wondering, over the next couple of days, how important is this level going to be, 128.20? We surged higher on the vote, but since that vote last Monday, the pound has not gone below 128.20. We've seen a sharp turnaround this morning, about 10 o'clock this morning, and maybe this afternoon might be quiet because of the holiday in the US. But I think early tomorrow morning, if we sort it sell off, how does it behave around 128.20? So for me, I'll be watching for maybe the potential of a retest. I've just flipped this over again to a 5-minute chart, but you can see how we've seen buyers step in 128.20, 128.40, this sort of area. It has provided a lot of support for the pound. So I think that's an interesting one to watch over the next couple of days. We'll come back to it tomorrow, because we're doing it tomorrow anyway, this time tomorrow. We'll see what's going on. But if I was a buyer of the pound at the moment, I would want my stop loss. The closest I'd want it is the other side of that level, the other side of 128.20. But I do think, going back to the question that sparked this off, that I do think there is I think it's this, personally, famous last words, it's a better than 50-50 chance that we see further pound recoveries into the end of March with all this Brexit nonsense carries on. But let's see what happens later on today, because Theresa May is meant to present this deal later today. Let's see where we are, because of course, politically it can change so quickly, which can make it a tricky market. But 128 to 128.20 has been a good level. If we take Brexit out of the equation, clearly Brexit does affect the euro as well, because it will be a massive impact potentially for the European economy. And the European economy, as we know, I think it is struggling anyway at the moment. We saw figures from Germany, I think, was it the week before last or maybe earlier last week, that showed the German economy grew at its slowest rate since 2013. And there's a risk, I think, that Germany and Italy will both go into recession this year. So it's far from plain sailing when it comes to the continental European economies. But I thought where euro dollar was interesting, so euro US dollar, let's just take this back. It's been a bit of a strange few months for euro dollar. We saw the euro push down to 112 in November of last year, and it was the lowest it had been since the June of the previous year, June of 2017. And we have seen it since then, the euro try and stage, a half decent recovery. January the 10th, it pushed above 115, and it was the highest it had been for about 3 months or so. And I just wonder, with the sell-off we've seen in the euro off that high, we're coming back to an area where we have seen, since the end of November, buyers for the euro against the dollar. Let me just flip this over to a 4-hour chart. So I think this is an interesting market to watch this week, euro US dollar. And for me, my money would be on the potential for a bounce. But I think at the moment it's still a bit weak. But if we pick up, I'm a big fan of just looking at simple stuff like trends and support and resistance. It has pushed a bit lower on Friday, and it's holding for now above Friday's lows. But I think that this whole zone for euro dollar this week, 112.70 through to 113. Yeah, we're currently trading at 113.65. It's going to be interesting to see if, because that trend is still up. It's a nice gradual trend we've had since mid-November in euro US dollar. It'd be interesting to see if we see the buyers come in. We've got the interest rate decision on Thursday this week, the European Central Bank interest rate decision. So we could have no change expected to European interest rates, but maybe we get some volatility around that. So that's one thing to look out for. But I think down here it has proved to be a good zone of support for euro US dollar. Let's just flip it over to the hourlies and take a look at like the RSI. So the RSI and the MACD, we had gone oversold end of last week on the RSI. You can see it here, January the 18th. So oversold. That was Friday, wasn't it? So 4 o'clock on Friday, pretty oversold. So for the really short-term traders, keep an eye on Friday's low, 113.50, just about 15 points below where we are now. But I think the bigger picture is that for euro dollar, and it's that recovery that's been chugging along for about 3 months now. So maybe we'll see a bit of positive sentiment coming back into the euro this week. Let's see where we are tomorrow when the US isn't on holiday and everyone's getting a bit more back to normal. But I think that's a really interesting market to watch over the next few days. We'll look at stock indices last today because the US is shut. But let's take a look at oil. So a really strong finish to the week for oil last week. Let me just pick up on this. So oil, and it's pushed a fraction higher today, but on Friday, the oil price, this is US crude oil, closed at pretty much $54 a barrel. And I think one of the things, I was doing a bit of research for once before doing this today. I think one of the things driving oil, I mean, clearly we had that enormous sell-off last year from almost $80, $77 a barrel, all the way down to 42, 43 just before Christmas. And we've seen it, it's bounced back. It's 25% higher than it was less than a month ago, price of oil. And there are cuts, there are production cuts, because clearly it's a supply and demand driven market. There are production cuts being made by what's known as OPEC plus. That's the OPEC, the oil cartel. The plus bit includes countries not part of OPEC traditionally, like Russia, for example, is the big one. So we are seeing cuts in producing oil, and then clearly, if supply is reined in a little bit, traditionally, from a basic economics point of view, you would expect that to affect the price and push the price a little bit higher. It continues to look like a reversal of that big slide we saw from October. But as I always say with this, I think where it gets interesting is if we have a half decent sell-off. We've not seen much in the ways of sort of real corrections in this recovery sort of after Christmas of last year. But for me, at the moment at least, any weakness does look like a buying opportunity in the price of oil. Yeah, so there's our trend that's been chugging away since Boxing Day. Quite a bit. I think I've drawn the wrong sort of trend line there. Quite a bit of support coming in from mid-Jan, ahead of $50 a barrel, which again you'd expect, obvious round number, and then just pockets left last week. 51.30. The Friday lows 52.50. So I think plenty of support if we did see the price of oil under pressure. So for me, if it does sell off, I'll be looking to see where it stops, looking to get in, and then looking to have a stop loss somewhere beyond one of these obvious support levels. So let's see what happens. Every Wednesday, traditionally, oil inventories are released, and it's basically how much oil is stockpiled in the US. Because there's a holiday in the US today, the oil inventories aren't coming out till 4 o'clock on Thursday afternoon. So Thursday afternoon, we could see some oil volatility. But it's a really bullish market still at the moment. There are some immediate hurdles. We've got these old highs left from December the 4th. So just above 54.50. So 54.50 to $55 a barrel. Maybe that's where we see some profit taking come back in and it sell off a bit. But again, I'd be expecting it to hook back up. I should say as well, I think we've still got to sign it off, but occasionally for clients, we do zero spread days. And on Thursday, it's not confirmed yet, but I think we're going to do it. On Thursday, we're doing zero spread on oil. So rather than having a bid offer spread, we're going to have, and it's pretty tight on oil anyway, it's what, 6 cents. We're going to have no spread on oil on Thursday. So if you fancy trading oil and you have an account with us, just keep an eye out because we'll send a push out and an email out when the no spread thing starts for oil. And if you don't have an account for us, just go to the website, open an account, and you can take advantage of that. But I think oil, really interesting market to watch this week. If we get a sell-off, looking to be a buying opportunity, but that recovery from December still going strong. Gold has been under some pressure. I've been waiting to buy gold again. So I bought a bit on the way up just because of the recovery for like a longer term recovery thing. And I was waiting to see, is it going to break $1,300? Because it really can't get through this month at least. It's not been able to get through $1,300. But that recovery from August, those August lows at 1160 is still going strong. And this for me is where it gets interesting. We've seen the price come under some pressure. And I think there are a couple of reasons for this. First of all, stock markets are having a fantastic month. I think the S&P is up about 6.5% for January so far after a dire December. So we're seeing a real bounce back for stock markets. So traditionally, when stock markets are weak and uncertain, the price of gold goes up. When stock markets are doing well, people aren't really that interested in gold. So that's having an impact. But also, what's the other thing? Dollar, the US dollar. The US dollar has come back a bit over the last few days, and a stronger US dollar impacts the price of gold. So I think, but it's interesting because that trend is still up. I'm more than happy to see a bit of weakness, and then maybe buyers come back in somewhere, and I'll be looking to buy after this weakness ends. But in the short term, it still looks pretty weak. At the moment, it looks like we are making just about lows for the year so far in the price of gold. Yeah, just slipping below those lows from the 4th of Jan, around about 1276. So maybe there's scope for a bit more weakness in gold. But for me, I do think we will see another go back at this 1300 area. It's just a question of when. I just want to see this weakness run out of steam. So gold's an interesting one to watch, and we'll keep an eye on that during this week and see if we see this weakness start to run out of steam. Let's take a look at stock markets. So like I say, the US markets goes. Actually, before that, let's do a quick look at Bitcoin. I mean, I think I say, I've got very little interest, to be honest, in the cryptos, but I thought it was weird. I looked at the chart this morning. It's really just what a really strange market this is. It's just bizarre. If we look at the month so far, does nothing for ages. Then we get these 1 hour moves, bang, does nothing. 1 hour move, bang, does nothing. You can just see it's just a pattern all the way through. I'm sure there's a great conspiracy out there as to why this is happening, but I think it's a demonstration of maybe what a thinly traded market it is now compared to a year ago when the whole bubble mania was going. That if there's a big seller, relatively big seller or buyer, there's a massive impact in the price, and then the price just goes dull again. But I thought it was just a really weird looking chart, just sideways for ages in these 1 hour moves. But of course, it doesn't change that bigger picture. The bigger picture, the trend is still down. As I said a few times, $3,000 for Bitcoin has been a big level in the past, 2,800, 3,000 from September 2017. But it's just a bit of for me, it's just a bit of, when it comes to trading anyway, it's just a bit of a non-event of a market. Right, I can see there are questions coming in, which is good. I'll deal with the questions when we've just had a look at stock market indices. So hang on for that. But let's take a look at the S&P. So the broader US stock market, like I said, it's moved. I think it's about 6.5% this year. So far this year, it's up 6.5%, and that was after just absolutely torrid time in December, falling off a cliff, bang, 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 massive sell-off, the worst December for US stock indices since 1931. But we've seen this brilliant recovery, and it did close. If we flip this over to an hourly chart, it closed on the highs for the year at the end of last week. It's a really strong close. I am surprised by how well stock markets have bounced back this month. I still think they're going to be a bit vulnerable to a sell-off, but for now at least, you'd have to look at that market, the S&P, so far this month, and still be a buyer on weakness. I think it is trading now because it's a 24-hour market, but the official market isn't open this afternoon. But I'd still be a buyer on weakness. I think it's only if we start to lose 25.60, the lows from 10 days ago, that we're in trouble of maybe a deeper sell-off. But for now, there does appear to be almost like a fear of missing out when it comes to stock markets. They start rising and then bang, 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 everyone jumps on board, and away we go again. So it's going to be interesting. I still think they're a bit vulnerable, but for now, we are not seeing that in their price. it closed highs for the month so far at the end of last week. Let's take a look at the Germans and the UK. Let's look at the DAX. So the German DAX is, if you've never traded the DAX, it's a really popular market. It's one of the more popular markets when it comes to indices with our clients. Pretty volatile though. It does. I think it's maybe a more interesting market than the FTSE, because the FTSE that does almost slavishly follow what's going on in the US and what's going on with the pound, whereas the DAX has definitely been doing its own thing since June last year. We're 6-7 months into this decline for the DAX, and even though it's bounced back, it still looks pretty weak. Overall, looking at that picture, we've got hurdles at 11.6. The highs from November, 11.7 and a bit. So for me, the shorter term trend is still strong, as with these US markets. It broke out through 11,000 last week, the DAX. So I'd still be tempted to be a buyer on dips. But I think we just need to keep an eye on that bigger picture. for the DAX. I think if we do see these US markets start to run out of steam at some point, which they will, we'd expect the DAX to start to roll over, and the risk is for that downtrend to continue. So, and it is looking a bit overheated, and this is the most overcooked it's been on the RSI since May last year. Okay, you can see that. Hopefully, this is the daily chart, the RSI there, and we've got to go back to here to see it this overbought. Let's see what happens. But I'd still be a buyer on weakness at the moment, because that trend for this month, as with US stock indices, is still very much up. And finally, the FTSE. Let's look at the FTSE. Again, it's a bit of a tug of war with the FTSE. It's getting dragged higher because US stock markets are going higher, but it's also being held back a bit because the pound has been a fair bit stronger this month. A strong pound traditionally is bad for the FTSE because so many FTSE 100 companies, BP, HSBC, all that lot, derive their earnings from overseas. So a weaker pound is good for their bottom line. So FTSE's bounced back, looking a bit similar to the DAX. So, we've been sliding since August of last year. The big level, I think, 7,200 on the FTSE. So a couple of 100 points higher than where we are now. Those highs from November. So if it's going to run into trouble anywhere, this is the area to watch. So maybe, if we see US markets still strong, we'll pull the FTSE up a little bit. But let's see what happens when it starts getting near 7.2. So it's really interesting stock markets the last few months because we have seen such massive swings. But at the moment they are still strong. But I think we're going to see them turn down at some point, particularly the German DAX and the FTSE. Let's see what happens. But like I say, this afternoon, the US market is shut, so don't expect too much in the way of drama this afternoon, and we'll see what tomorrow says. Right, let's deal with some of these questions. So, are you suggesting we should be selling pound US dollar? I'm not suggesting anything, obviously. We don't give advice, but I think for me, you're looking at pound US dollar. I've been saying for a few weeks, I just think that, some of the pessimism about the impact of Brexit on the pound may well have been overdone. That's what I think, and it does feel this month as if it has wrong-footed lots of people, pound US dollar. So I think if someone said, is it going up or down from here over the next 6 weeks, I'd be leaning towards the up, it going up, as hopefully we end up with a better Brexit than the one we're facing at the moment. But let's see what happens. Someone's saying, please check New Zealand dollar, Canadian dollar. Okay, let's have a look at that. Let's have a look at, so New Zealand dollar, hang on, if I can type it, New Zealand dollar, Canadian dollar. Let's bring that one up. What do we think? Let's have a quick look. Let's flip it to a daily. I don't know. What do you think? Well, it's actually let's put this together. So June 2018, the New Zealand dollar hit 92 against the Canadian dollar, sells off into October down to 83. So we saw it's pretty much a 10% slide, isn't it? It's rallied back up again, but again you see how important these old levels are. Where has the New Zealand dollar run out of steam again? 92, 92.50, something like that. So we've seen this market, good trend up, break the trend, bang, and gone a bit weaker. So for me, my money would be on, I think maybe the risk is for a sell-off again from here. I suppose there are a couple of ways of trading this. I think if you wanted to be aggressive and someone said, right, you have to do a trade now on New Zealand dollar, Canadian dollar, we are just about holding above the early January lows at 89. So the aggressive trade, be a buyer now at 89.40 with a stop loss under 89. I think that's the aggressive trade. But I think you'd need to view it in the light of what's going on in the daily chart. So maybe we get another squeeze up, and a squeeze up would be a good selling opportunity with stops above. But it does look as if the last couple of months that it's rolled over again in this 92 area, doesn't it? So for me, maybe the next few months we see the market under some pressure, but maybe over the next couple of days we see it blip up from here based off this L support. It's an interesting one, isn't it? It's quite a difficult one to call, I think, that because we're seeing potentially this trend changing. So for me, if someone put a gun to my head, I might be a buyer now with a stop loss under 89. But I think maybe longer term, the risk is it's gonna slip a bit lower. Okay, in US equities, what do you think about financials, broker-dealers, regional banks rebounding to the downside of the 2007 highs, and technology and semis to the downside of the 2000 highs? Okay, so you're saying that you think that the banks are going to go back to financial crisis levels and technologies down to the 2000 levels? Is that what you mean? I think that's maybe a bit too negative. I think we can't rule it out. But I think what was interesting, we were looking. If we look at, I mean, I don't look so much at these individual sectors, but we were looking at the Nasdaq last week, and we're looking at the let me get my words out. The daily chart for the Nasdaq, and it's interesting that it did push. Did it push through that level last week? Why aren't my trend lines working today? Hang on a second. Let's try that again. I think it's interesting, what's going on in with technology stocks, because they have driven so much of the market higher up until last year, and have been quite hard hit in the last 6 months of last year. But we're breaking out to that downtrend on the Nasdaq now. So I think it's in something of a crunch point for the tech stocks. I wouldn't be that negative to say we're going to go back down to the 2000 lows if that's what you're suggesting. That's the old .com bubble bursting area. But there is scope. I think when these markets roll over again, for us visiting, for it dropping 10% from here back to the December lows. It was only a month ago. Let's not forget, we were down at these levels. So I think there is still pressure on these tech stocks, but I wouldn't maybe get too bearish just yet. Let's see. Natural gas, the old favorite. Someone has a look at natural gas. So again, I said this is one of the most traded recently amongst our clients, because it's one I never look at, because it has been at this crazy market, at this ridiculous move in November in natural gas. And I think I've said it before, but it's worth looking up. There was an options fund that basically imploded and lost millions because of the move in natural gas in November. They were betting on pretty low volatility, which had been the story for so long in the natural gas market, and it just went crazy again. And clearly, if you're selling volatility and volatility suddenly explodes, it's like being short and the market just going up and up and up and up. So natural gas, it's been a pretty boring couple of days, isn't it? But again, I suppose if you were taking the view, okay, the market went crazy, the craziness has evaporated, we've gone back to maybe a more normal market, you could argue this weakness from here is over. So I think like I said last time round, if you thought, it's an interesting one if you thought natural gas was gonna rise from here, because you'd be a buyer at 3.1, and for me the logical place to have a stop loss is the other side of these lows from early January, around about 2.8. But it's not a market that I look at particularly often. But that's what it looks like, natural gas at the moment. So yeah, let's see. But it's been pretty dull since we last looked at it. Okay, let's see. Can we talk about oil? We did talk about oil. So if you missed that, if you watch the recording of this, which will be up as soon as we finish this, oil is in there. Perfect. That's it. That's everything, isn't it? So I think a quiet afternoon in prospects because the US is shut. The pound is interesting because of the ongoing Brexit nonsense, discussion, politics, all that stuff. But 128 has done a good job of holding the pound up since the vote in Parliament last week, where Theresa May got defeated by a record amount. The euro, I think, is a really interesting market this week because we are still in this recovery off those lows. That's still chugging along. So if it's going to bounce, then this could well be the week that it bounces. And oil, because it's had such a strong bounce back, and any weakness in the price of oil, I think, still looks like a selling opportunity. But we'll do this all again tomorrow at 12:30. We'll see where we are. Like I say, if you are an account holder, we push out the messages from the app, but we're not going to do it every day. You don't want to annoy people. So the best way of getting notified, just as you're watching on YouTube now, press subscribe and then click on the alarm bell thing, and you'll get a push from YouTube when we go live. And of course, as usual, to find out more about the company, to take advantage of that zero spread thing that we're doing on Thursday for oil, just go to the website, Capital.com, sign up. You can sign up for a real account, a demo account. You can put $100 in, $100 million, whatever you're comfortable with. And any questions, drop me an email, david.jones@capital.com. So thanks for coming along. We'll do it all again tomorrow at the same time. Good luck with your trading, and we'll see where we are on Tuesday.